Hi, it's March 16th, and this is breaking news update brought to you by themortgagereal.com. Put on the brakes before you believe any of your radio station advertisements, before you get a mailer, before you listen to media. Interest rates, them talking about them going below 4.5%. Let's put this into very clear perspective. We have been very clear and taken a very strong stand for homeowners in regards to how this is all unfolding at this time. For the last at least 8.5 weeks, we have been commenting on mortgage-backed securities and the involvement of the Federal Reserve. The Federal Reserve, again, from January 1st up until June 30th, announced that there's $500 billion that they're going to be buying in mortgage-backed securities, heavily investing in at least. $200 billion more came out with the new stimulus plan that was announced. Ben Bernanke just made a huge announcement that sent Wall Street all in green territory towards positive, that said they're going to put in another $750 billion. Let's put into perspective why interest rates may not go below that 4.5% mark. And in fact, as we're seeing this, I'm talking to you right now, interest rates are not improving through major lenders across the country. Why is this? They have to create a stable platform with all these new financing programs like the 105% affordable home loan program to be put in place. You cannot have volatile interest rates going like this on a daily basis, going down to 4.5%, 5%, because what happens? Homeowners will wait. They cannot afford at this point to let people wait. They have to take people and put them into action and let them know rates aren't going below 4.5%. If you have anything north of 5.5%, Kramer just announced on CNBC, best time to refinance. If you wait past this opportunity of this $1.3 trillion that has been allocated to the mortgage world, to homeowners, to refinance and buy, you may be playing with a roulette sword here. The reason why we're saying that is because going into next year, this money may not be on the table anymore. Should that happen, you're back to open market. In open market, we all know at some point in time, inflation will return and show its ugly face. So if that comes to fruition, what happens to interest rates? Yields go up, interest rates go up. Again, 105% refinancing programs have been made available based on the Home Affordable Solutions program. But here's the thing, mortgages have to stay at a constant, and they've achieved this by letting the entire world know that they're going to do everything it takes to keep interest rates flat. So this volatility will not be there. Without volatility, if you're sitting there as a homeowner right now and you knew there was an opportunity for interest rate to go to 4.5%, would you wait? If you're not in any type of financial distress, of course you're going to wait. However, if you knew now, it's because of what we've been saying for the past 3 months, that because of the Federal Reserve's participation of what's going on right now in the economy, that because they've allocated these funds, interest rates will remain stable. Most likely it's going to put people into more action. More people are going to refinance, get themselves into better financial positions. New homeowners are going to come out to buy, and they're going to find that these interest rates have become flat. So now it's going into a later part of the year, the threat becomes, what if this money's not there? We better buy. So we're hoping that this is going to stimulate the market that we need in order to make the real estate market begin to revolve again as far as purchases. So again, please, before you believe any media hype on what's going on with interest rates, please listen to this clip and reflect back to the other one, will interest rates go below 4.5% on our headline webpage. The main reason for that, again, the Federal Reserve has put in their biggest action plan. Ben Bernanke is being called by Kramer a brilliant man. And because of this, we're going to keep interest rates flat to create this environment for all homeowners, giving them the opportunity to refinance, get restabilized, resituated, new home buyers come in. Interest rates are not going to do this volatile pattern because it's absolutely flat now. 1.3 trillion should last us through 2009. Originally, with the original plan of the 500 billion, that could have dried up even before June 30th. So now we have the money on the table to keep us through the summer months, the peak months in Washington for real estate, and almost the entire country for selling real estate because of good weather, people are out more. That is now going to hopefully trigger and start to drive the home buyers that were thinking about it, sitting on the fence to say, hey, interest rates may not go there. We have been taking this stand for all homeowners in Washington since January, ever since the plan was announced, and we're still standing by it today. And that is still why we are not seeing interest rates drop below that 4.5 point. If it's dropped below the 4.5 point, you're paying some massive closing costs. Pay attention to it. Discount points, buy downs, that's all coming into play. A lender right now across the country can't give you a good faith estimate with 4.5% with basic closing costs. It's not getting there. To go to 4%, some lenders aren't even pricing it on their rate sheet. It's called secondary market pricing, not even being offered. So before you get fooled by a lot of advertisement, mailers you're getting at home, be forewarned. Educate yourself. Please allow us to partake in that part of the education. That's what we're committed to. At the same time, look at the resources and really listen to what media is saying now, because it's making a difference on people's mindsets about where interest rates may go. Thank you very much for tuning in to this, breaking news update. We'll bring you more as news comes.